The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Well, let's get to it, but of course the most pertinent topic at the moment is what has transpired in the Middle East over the weekend. Kai, so much to watch at the moment. You know, it was, well, AI remains an issue.
Yes.
Is it private credit with further cracks emerging there? And now, of course, we have Middle East conflict.
That's right.
How do you play it?
Yeah, there's a lot on the table for sure. So, basically the market opened up with a bit of risk off this morning. I was eating dinner on Saturday night and we got the news that it came through. But, it's been really in the market for a couple of weeks. We did see a lot of military assets positioned in the Middle East. So it wasn't a total surprise that this attack came. But of course, the risk is really kind of what are the implications for commodities, especially oil. This morning we saw basically oil prices go from 67 close on Friday to about $73. And a lot of the oil stocks have been rallying pretty hard this morning.
In fact, that's going to be our stock of the day. We'll get to that in just a moment as a tease for you. But David, what do you make of the market reaction so far?
Yeah, well, I think it's obviously very early days. We don't necessarily know how this conflict will play out, whether or not it's a short-term attack and there is a regime change in Iran, or whether it's a more protracted war like we saw in the Gulf War scenario. I think from a market's point of view, the biggest concern at this point in time is the fact that the Strait of Hormuz is closed, which carries about 20 to 25% of the world's oil, as well as a lot of other goods that go through that area. So that, from a market point of view, is the biggest concern in the short term. And as Kai said, we've seen that spike in the oil price and a little bit of risk off in the rest of the market. So yeah, certainly a situation that will evolve across the week. But in the short term, we're seeing a spike in gold and also in oil.
We are indeed. You take a look at the market today, it is the gold stocks and the energy stocks that are flying. And we've seen the bank stocks come off. There's also that news of that collapse of that mortgage broker out of the UK, and that's been a drag on financial stocks across the globe. Certainly some concern there, David.
Oh, absolutely. Yeah, that is a concern that's been, we obviously got that news over the weekend, but it has really been playing out over the last few weeks. There's been a few cracks, as you said, in that private debt market, and private credit has been an asset class that over the last couple of years has really gained a lot of exposure and a lot of interest around the world. So, yeah, certainly a big concern there for financials and also for investment portfolios that have exposure to private credit. So I think that it's important that those that have that exposure need to make sure that they understand the risks, because private credit is a big term and it encompasses not only investment grade credit, but it also encompasses a lot of other higher risk type credits. So I think it's important for investors just to check the risks that they've got.
All right, well, let's get to our stock of the day. In fact, I asked both our experts to discuss the stock that's likely to be affected by the strikes in the Middle East. And the stock we have chosen is Karoon. It's among the best performing in today's trade. Some analysts forecasting that oil prices could reach more than $100 a barrel if that tanker traffic through the Strait of Hormuz is not quickly restored. That's after the US and Israel strike Iran. Now, this follows, of course, also the assassination of Iran's supreme leader, Ali Khamenei, which has thrown the region into chaos and put the global economy on edge. Now, Wood Mackenzie warning that of a dual supply shock that could strand most of OPEC's spare capacity, as well as halting exports. And energy analysts at Bernstein Research warning oil prices could jump to between $120 and $150 a barrel. So let's take a look. We opportunity here to talk more broadly what we're seeing in the energy space, but let's focus on Karoon. David, how do you see it?
Yeah, Karoon is a very good business. They announced in their result that they had reduced their costs relatively well as growing their production and their revenue. So Karoon is one of those stocks that is highly leveraged to the oil price, and I think that's probably one of the reasons that we've seen it being the best performer today. In early market, it was up about 17.5%. At the moment, it's up about 14%. But even at that level, we think it is good value. We've got a buy recommendation on Karoon. Their PE ratio for this financial year is about 13 times, but based on our forecasts, gets down to about 7 times next year, because there is an expectation that they will dramatically increase their production and increase their profitability. As I mentioned, it's important that they've not only growing their revenue base, but they have done a very, very good job of reducing their cost base. So from a profit and loss point of view, they're highly leveraged to the increasing oil price. So, even at current levels, they're very profitable. And as you mentioned, there are expectations from a number of analysts around the world that the oil price at current levels, around that 72, 73 mark, will go a lot higher over the coming week. And potentially, if this is a more protracted escalation of tensions in the Middle East, there's the expectation that oil price could be higher for quite some time. So Karoon is one of those stocks that gets that leverage to higher prices.
All right, a buy from you. That's even bearing in mind how far it's moved today. Kai, what do you think?
Yes.
Yeah, no, very, very similar to David. I think in terms of the composition of that, of Karoon, they have a high exposure to crude oil, as opposed to some of the other stocks, for example, Woodside, where they're more heavy on gas, LNG gas. So, in terms of direct exposure, Karoon is a very good way to play it, and it's not too expensive as a stock. But I'd be kind of wary in terms of how aggressive this will play out. Hopefully this is a short campaign. But it's really hard to see, because if they do actually end up choking off the Strait of Hormuz, that's about 25% of the world's oil supply. I don't know if it go up to $120, but that would be incredibly bad for the economy if oil prices go up there. But yeah, I think if we see a prolonged blockade at that strait, we're going to see oil prices higher. Having said that, I'll be fairly dynamic. It's not a for sure thing, because if there's de-escalation, we will see some of this come out of the oil stocks. So, I'd be very dynamic in my position. Yeah.
To the point of how
ready to take profit. So I'd be, if you're on it already,
yep,
I'd be selling on the way up. Just in case, because these things turn around very quick. If there's de-escalation, these prices will come back down.
All right, so that's a bit of a different view then on Karoon and how to play the current crisis that we're in. So, David, you'd still be buying at these levels, whereas Kai looking to take profit, particularly as it moves higher. That is our stock of the day, Karoon Energy.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.